The financial world is changing. We are moving away from physical money. Digital transactions are becoming the norm. Cryptocurrencies are at the forefront of this change. They offer a new way to think about money and payments. Crypto challenges the established systems. Could it replace traditional credit cards? This is the question many are asking. The answer is complex and depends on many factors. Cryptocurrencies are digital assets. They use cryptography for security. They operate on decentralized networks called blockchains. This technology allows for secure and transparent transactions. Transactions happen directly between users, without intermediaries. This is a key difference from traditional financial systems. Cryptocurrencies offer several advantages over traditional payment methods. They promise lower fees, faster transactions, and increased security. They also have the potential to bank the unbanked. This means providing financial services to those without access to traditional banking. The potential for crypto to disrupt the payments industry is undeniable. However, there are challenges to overcome. Volatility, scalability, and regulation are major hurdles. The way forward requires innovation, collaboration, and a clear understanding of both the potential and the risks. Credit cards are ubiquitous. They are the dominant form of payment for many. Their convenience and benefits are undeniable, but they are not without their drawbacks. To understand the potential impact of crypto, we must first examine the current state of credit cards. Credit cards offer several advantages. They are widely accepted. You can use them for online and offline purchases globally. They offer consumer protection against fraud. They provide rewards programs like cashback and travel points. They also help build credit history. This is essential for securing loans and mortgages. However, credit cards also have downsides. They charge high fees to merchants. This cost is often passed on to consumers through higher prices. They carry high interest rates. This can lead to debt for those who don't pay their balances in full. Credit card information is vulnerable to security breaches. Identity theft is a constant concern. Finally, the credit card system is controlled by a few large financial institutions. This gives them significant power and influence. The credit card system, while convenient, is not without its flaws. These flaws create an opportunity for alternative payment systems to emerge. Cryptocurrencies, with their promise of lower fees, faster transactions, and increased security, are well positioned to capitalize on this opportunity. Cryptocurrencies present an alternative to traditional payment systems. They offer potential benefits that could reshape how we think about money and transactions. From lower fees to increased security, the allure of crypto is undeniable. One of the most significant advantages of crypto is lower transaction fees. This is especially beneficial for international transactions, where traditional methods can be expensive. Crypto transactions are also faster, often settling in minutes compared to days for bank transfers. Security is another key advantage. Crypto transactions are secured by cryptography and recorded on a public ledger called a blockchain. This makes them very difficult to tamper with. The decentralized nature of crypto also eliminates the risk of a single point of failure, making it more resilient than traditional systems. Crypto also has the potential to promote financial inclusion. Millions of people worldwide lack access to traditional banking services. Crypto can provide a secure and accessible alternative, empowering individuals and fostering economic growth. While still in its early stages, crypto offers a compelling vision for the future of payments. The potential benefits are numerous. However, realizing this vision requires addressing the significant challenges that crypto faces. Despite its promise, crypto faces significant challenges. Volatility is a major concern. Cryptocurrency prices can fluctuate wildly, making it risky for everyday transactions. Scalability is another hurdle. Crypto networks process limited transactions per second. Regulatory uncertainty poses a significant challenge. Clear regulations are essential. User experience needs improvement. Crypto wallets can be complex and confusing. Security concerns persist. Exchanges and wallets are vulnerable to hacks. Overcoming these challenges is essential for crypto to realize its full potential. Section 5. Head-to-head crypto versus credit cards. Crypto and credit cards represent two different approaches to payments. They each have their strengths and weaknesses. Comparing them head-to-head reveals key differences. Crypto generally has lower transaction fees and faster processing times. Credit cards offer convenience and consumer protection. Crypto provides increased security. The future may blend both systems, leveraging their strengths. Section 6. The future of finance. A blended landscape. Predicting the future is a fool's errand. However, we can analyze trends to imagine the future of payments. Will crypto replace credit cards, or will both coexist? Coexistence is likely. Credit cards are deeply integrated into the global financial system. Crypto is still in its early stages. Both systems may continue to operate, catering to different needs. Integration is another possibility. Imagine using your credit card to pay with Bitcoin seamlessly. This would combine the convenience of credit cards with the benefits of crypto. New technologies will disrupt the payments landscape further. Central bank digital currencies and digital wallets could reshape transactions. The future of payments is dynamic and multifaceted. The relationship between crypto and traditional payment systems is evolving. It's not a simple case of one replacing the other. The future may be a blended landscape where both systems coexist and evolve. The key is to remain adaptable, embrace innovation, and focus on creating a more inclusive and efficient financial system for everyone. Section 7. Crypto's potential: a transformative force. Cryptocurrency is more than just a new form of payment. It represents a fundamental shift in how we think about money and finance. Its decentralized nature, transparency, and security have the potential to transform various industries, from finance and banking to supply chain management and voting systems. One of the most significant impacts of crypto is its potential to bank the unbanked. Millions worldwide lack access to traditional banking services. Crypto provides a secure and accessible alternative, empowering individuals and fostering economic growth in underserved communities. Crypto also has the potential to revolutionize international payments. Traditional methods are slow, expensive, and often rely on intermediaries. Crypto transactions are faster, cheaper, and more transparent, facilitating cross-border trade and remittances. The transparency and security of blockchain technology can revolutionize supply chain management. Tracking products from origin to consumer reduces fraud, improves efficiency, and enhances trust throughout the supply chain. Crypto also has the potential to empower individuals by giving them more control over their data and finances. Decentralized systems reduce reliance on intermediaries, giving individuals more autonomy and privacy. While challenges remain, the potential impact of crypto is undeniable. It has the power to transform industries, empower individuals, and create a more inclusive and equitable financial system. The future of money is being written, and crypto is playing a significant role in shaping its direction. Section 8. Conclusion: the evolution of exchange. The world of money is ever evolving. From bartering to coins, paper money to credit cards, and now cryptocurrencies, the way we exchange value is constantly changing. Crypto represents the latest iteration of this evolution, offering a glimpse into a future where transactions are faster, cheaper, and more secure. While it's still too early to definitively say whether crypto will replace credit cards entirely, its impact on the payments landscape is undeniable. Crypto challenges the status quo, forcing us to rethink traditional systems and explore new possibilities. The future of payments may lie in a blend of traditional and emerging technologies, leveraging the strengths of each to create a more efficient, inclusive, and accessible financial system for everyone. The conversation surrounding crypto is often polarized, with fervent supporters and staunch critics. The reality is more nuanced. Crypto presents both opportunities and challenges. It's crucial to approach this evolving landscape with a balanced perspective, acknowledging both the potential benefits and the risks involved. By fostering innovation, collaboration, and responsible regulation, we can harness the power of crypto to create a more equitable and efficient financial future for all.